Stephen, the global body, along with the Bank of America, have cautiously indicated that there is a glimmer of hope in the South African economy as well as activity. We are joined now to talk more about this by Sub-Saharan Africa economist, that is Tatonga Rusike. Thank you so much for your time, Tatonga. First of all, there's an optimistic outlook in South Africa, but as you heard there from Stephen, load shedding is upon us. Let's talk about the highlights from this particular event.
Thank you very much for giving us the opportunity. The starting point on the cautious optimism is that South Africa is still predominantly a commodity producer. So when commodity prices are high, South Africa tends to do well, which was the case with the recovery last year, with economic growth coming close to 5%. And this year we are looking at economic growth coming closer to 2%. Our estimate is 1.8%. So commodity prices do provide an uplift for South Africa. However, as you mentioned, there are domestic constraints which relate to electricity supply constraints as well as logistical constraints that relate to Transnet that can affect movement of goods and production indeed.
And of course, the latter then poses a risk to economic transitioning in South Africa. Is there space for the so-called call for this reform that is needed in the South African economy, and what should that look like in relation to the global scheme?
Look, I think the call for reforms has been there, continues to be there, and should be there for longer. If you see that the positive uplift is actually coming from global factors, which are the commodity prices that are higher. If we look at some of the domestic factors, you realize that the issues around electricity supply constraints, these are long-standing. So these need to be addressed. The issues with movement of goods from production to ports, particularly using rail, these are also long-standing constraints. So reforms that strengthen Transnet, reforms that strengthen Eskom are good for South Africa, are good for growth. Then you've got also other broader reforms that have been taking place, be it around technology, data, immigration, but these are small scale. So in the medium term, when you look at it, there isn't an incorporation of stronger growth because of reforms. So reforms are taking place, but they are really slower. The big hitters are those on energy as well as movement of goods that can change South Africa's outlook. But I think we are not yet there. The pace perhaps needs to be stronger or faster to get to a place where growth is consistently stronger.
And to what extent are the likes of unemployment, poverty and inequality in South Africa weighing on the process and progress of economic growth?
Indeed, it weighs on growth, but more importantly, it weighs on fiscal policy. You would recall that the July riots last year resulted in the government reintroducing the temporary COVID grant at a cost of about 40 billion rand. So that additional cost is also trying to cater for those adults that are unemployed without economic opportunities. So if the issues of unemployment, inequality and poverty remain, it is an additional cost for the government. There are discussions around making this grant permanent in the name of basic income grant. So the direct cost is the fiscal cost, which would make it difficult for the government to adjust its fiscal deficits downwards, which would make it for debt to stabilize. So it becomes more complicated. So measured approaches are probably what the Treasury is looking at, but the first and foremost is cost on the government and its ability to provide to citizens.
A lot of balls to juggle and a balancing act really there when it comes to the South African economy. Thank you so much for your time. That is Tatonga Rusike, who is an economist, talking to us about the outlook on South Africa's economy. We take a look now at the latest developments on the market.